with that, I want to introduce our topic for today, March Madness, investing in identity. We have three amazing people, well, two amazing people and me. This is the game that changed it all. We have Cameron D'Ambrosi, our managing director here at One World Identity, as well as Dave Fields, the partner over at PTB Ventures. Welcome, guys.
Thanks, Travis. Excited to be here.
Thank you for having me. I'm excited to see to what extent insightful comments correlates with hair length. So,
yeah.
All right, the pictures
directly correlated, inversely correlated, or uncorrelated in Cameron's case.
You guys have great hair. I understand. Dave, real quick, who are you and what do you do? Why don't you introduce yourself a little bit?
So Dave Fields. So I started PTB Ventures a few years ago. The core insight at PTB Ventures was markets and networks are converging, and identity is really the fault line in that convergence. And so there's three prevailing technology trends today that I think are really shaping and defining not just markets and networks, but also society. That's things like connected devices, both mobile and IoT, artificial intelligence, and then blockchain is a broad category, although really focused on permissionless blockchain. So those three technologies are all kind of part of how markets and networks are going to be shaped going forward. And so identity is one lens through which to view that transition and an interesting way to then allocate capital and build an investment portfolio.
Nice. Well, we're super excited to have you join us. Obviously, I think our audience knows Cameron. So let's go ahead and jump on into it. Obviously, this is the big deal of March. I think it shook everybody quite a bit with the valuation. The number was absolutely astonishing, $6.5 billion for this transaction. So, just by the deal stats alone, $6.5 billion, all stock. It's going to have Auth0 still operating as an independent company within Okta. This is kind of a crazy deal, right? Auth0 was founded back in 2013. They've raised roughly $330 million during that time, completing about a financing round every year, becoming a unicorn in 2019. These guys were in our startup alley at our 2017 event in DC, right? So these guys obviously really just took off, did an amazing job. And I think this is in my opinion, this is a great buy for Okta. This is highly defensive. Okta has both the workforce management solution as well as trying to get into the customer IAM side of things. They struggled a bit there, even though 25% of the revenues do come from SIAM. I think this is a great buy for Okta, but I want you guys to weigh in as well. Let's start with Cameron. What are your thoughts on this one?
I think they, in some ways, you hate to say they had no choice, but as we'll get into it when we pull up our landscape, we really believe that these market segments were on a collision course. The CIAM space, the IAM space, the authentication space are really inevitably coming together. We at OWI talk about this a lot. Digital identity is not a what, it's a how. And that authentication component of identity and access management is really core functionality, critical to all of the areas in which Okta wants to play now and logically hopes to expand to. So I think it makes a lot of sense from that perspective. And, I think you can quibble with the valuation to some degree, but that's just dollars and cents, and it's a play they needed to make. So, I'm sure maybe this means that there was other bidders who had thrown their hat in the ring, and this is where they needed to be to get the deal done.
Yeah, and before I toss it to you, Dave, actually, let's pull up kind of the chart here a little bit. Okta this is when, between when they went public as well as one of their major competitors, the comp for Ping. You can see here, Okta has been rewarded by their investors for quite some time with some pretty significant growth over 2020 and into 2021. And looking at their income statement here, you can see a lot of their top line revenues have continued to grow quite significantly year over year with that gross profit. However, we do see that operating profit and loss kind of keeping up to pace here. Dave, you're the only CFA on the call. What do you take from these financials and Okta's ability to make this deal happen?
Right. Well, look at the top line growth, right? So, in 5 years, company's gone from 40 million of revenue to, 830 million. Those are fiscal year, those aren't annualized run rates, that's actual, GAAP revenues. So this is really strong year-over-year performance. Now, I know Okta's made some small acquisitions here and there, but I don't believe that there's any, this is the first acquisition, where they're buying a company that's on a 9-figure revenue run rate plus, right? So, the market recognizes now, the public market certainly, that this is a gigantic market opportunity, and Okta has the best product and is executing the best in its segment or its category. Long term, you can see that operating losses continue to grow, so the market's been happy to fund that growth and rate that appropriately. We'll see at which point, the market expects them to turn the corner. But for now, what this is telling me is that public markets appreciate just how big identity is in a very, very broad sense. And I think we'll get to that in some of the other news as well. But like right now is clearly some sort of inflection point or recognition that just how big identity is, the way we're talking about fintech a couple of years ago. Now we're seeing an explosion in sort of fintech funding. I think identity is now at that point as well.
Yeah.
If you want to talk about this specific deal, yeah, thank you for pulling up the stock chart. I mean, I think there's a couple things, you can look at this, you obviously have where the deal's marked right there. You see that the stock is down since then. When this deal was announced, I was reminded of Eric Schmidt's comments, almost, a decade and a half ago or whatever it was when Google bought YouTube. And Eric Schmidt at the time said, I will absolutely, he was like, I will concede the price that we paid is wrong. And we either paid way too much or we paid way too little, and I'll tell you in 10 years. And that's basically my take on this deal as well, which is, I agree with you, what both of you have said, which is, there's going to be more and more the distinct categories that you guys have in your honeycomb. We're going to see consolidation, and we're going to see more competition between those different segments. And so Okta's spending, basically 20% of their market cap to buy their way into another segment and really just sort of like consolidate their product coverage and cover, perhaps a gap that they had in their category. So like, to me, that doesn't seem outrageous. Facebook did the same thing. They bought Instagram and they bought WhatsApp. That was about 20% of their market cap that they spent on those acquisitions at the time. So I look at that and I really think about this on a relative value perspective. I don't think as much about let me step back. The headline value of the stock price is eye-catching. It is meaningful. It does say something. I think far more meaningful is thinking about it on a relative value perspective and how much of Okta did they have to pay to acquire Auth0. And like, that's really where it starts to get, a bit more interesting. And so I think 20%, that's probably an appropriate, relative value, for them to spend on an acquisition at this stage in their development. Both of them still have a lot of runway. So we'll see in 10 years.
Yeah, I think that's
my key take.
Yeah, I think that's definitely a fair take on that. And when we look at this, obviously you made it the point before. If we pull up a chart with Nasdaq, like it probably didn't look too dissimilar in terms of curve, right?
Yeah.
I think timing here probably kind of makes this look a little bit worse than reality.
Yeah, I mean, the last month, NASDAQ is largely traded sideways. I can't, if we put NASDAQ on the chart and, we took that, yellow line and we maybe marked it with like key news events that had, and correlated that more with just broader market movements, it's not clear that the market's saying something specific about this acquisition at this time. If anything, that means it could be, a good, maybe Okta's a buying opportunity for that reason, just because the market maybe isn't fully, maybe on some level, like, Okta should be re-rated. It should be less risky because now they've been able to, like you said, buy into this segment that's got a lot of growth ahead of it. And now Okta can focus on, integrating that and then pursue, other parts of the honeycomb, that the OWI team has put together.
Yeah, let's actually skip over to the honeycomb here, because I think it's a really good point. There were some rumors going around that Salesforce was likely going to buy Auth0, and that made a lot of sense. Obviously, they made a pretty large, pretty significant strategic investment into them the year before. So we look at this, we go, okay, Okta made the move. They've kind of established themselves as a dominating force here. They still have some some pretty big competitors in the wake, right? We have, of course, Ping, who we talked about earlier, but also Microsoft, right? Microsoft kind of coming out and kind of swinging for the fences here across the board. We expect to see some movement from them. But when we pull up this here on the landscape, we have Okta and Auth0 kind of, and you can see that shaded in the red there. For those of you that are seeing this landscape for the first time, this is our digital identity landscape. Each one of these honeycomb segments represent a solution segment in the market. There's about 33 of them here. So if you're counting, hopefully I just helped you out there. The colors represent the dominant data type that sit underneath each of the solution segments. The red represents the self-managed data type, the blue deterministic, and the yellow orangish color there is probabilistic. So when we're starting to think about where this kind of leaves the competitors, leaves everybody in the kind of the space, where do they go from here? To me, it makes a lot of sense to start tackling maybe behavioral biometrics a little bit more head on, mobile identity and device intelligence. There's obviously a clear room, lots of runway there for mobile identity, and then fraud prevention and risk management, which we've seen a lot of deals over the past year kind of exploding, as well as some pretty significant valuations from the likes of Forder and Riskified. Cameron, what is your take here on this, specifically Okta Auth0, and then the broader kind of competitive comparison ecosystem? Where are people going to make some moves?
Yeah, so I think, look, where we've put these market segments next to one another in many ways is where we predict consolidation, and the closer that market segments are together, the more impact and influence they have over one another. And more broadly, we really do see the edges, across this top part of the landscape, all pushing in around this IAM piece, whether it's identity governance and administration, privileged access management, pushing into IAM, as well as on the cybersecurity side of the map, up by endpoint security, network and infrastructure, IoT, antivirus. That's really pushing into that authentication layer as well. With, I guess, pick your buzzword poison, but identity is the new perimeter, getting thrown around a lot these days. And so I think really prescient from the Okta team's perspective to understand that authentication is kind of the next frontier of all things cybersecurity, whereby you're using the identity layer to really secure your network, secure how both people and devices and software elements interact with one another. And that's one of the next big battlefields. So I think this really is positioning Okta well to do battle with, the cybersecurity endpoint players that we really expect to also attempt to be pushing in towards the middle of this map. And Travis, I think to your point, areas where we expect further consolidation via acquisitions are in that behavioral biometric space. I think you could highlight user and entity behavior analytics, or UEBA, fraud prevention and risk management, mobile identity device intelligence. Again, thinking about digital identity not as a what, but as a how. How are users expecting to access these systems? They want high levels of assurance. They want low friction. And they want to use a bunch of different devices. All of these things are relying on forging those connections between underlying individuals, between their devices. The fraud prevention and risk management piece, layering in a lot of network intelligence, whereby your profile, your behaviors on one site can propagate out across the entire network to both pop bad actors as suspicious, but also green light good users. And I really think that is where the playing field is heading. Just as much, can you give trusted, known, good users as high quality of an experience as possible? Not just worried about keeping bad actors out, but how are you going to delight good users and keep their user experience as high quality as possible? So I think that's where in my perspective, this battlefield is headed.
Yeah, I think that's a really good point, and you're right. We probably should have highlighted UEBA on this map as well. Obviously, that's a pretty pretty rising star, right? It's one of our golden cog opportunities. And if you guys are saying what's golden cogs, what are golden cogs, go check that video out in our library. It's one that we did last month. One of the other things that I'll kind of bring up before I toss it over to Dave for his thoughts on the map, and obviously I want to think about call sign as well, which you're a pretty significant investor in, is Auth0 is a developer first company, right? Okta was not, right? I think there's a pretty well kind of established, it's a known thing in the market that Okta kind of lacked this developer forward kind of sentiment, more of an enterprise sales level or forward kind of process. When they bring in Auth0, right? And obviously they're going to act as an independent company, but that's telling the market, hey, we care about developers. If we look at the other, kind of the solution segments on this landscape, mobile identity and device intelligence, that's an area where there is some conversations about developer first solutions. Obviously, Twilio has done a fantastic job with that, but they don't really compete in the mobile identity and device intelligence space as broadly as other companies like Prove or Boku or Telesign. But is the developer side of things going to drive a lot more of these conversations? Are companies like Okta and Ping going to be looking for companies that are developer first in these solution segments, or does that not really matter as of right now? I guess that question goes back to either to Cameron first.
I think that's an interesting, you might call it the multi-billion-dollar question. I think where we are going to continue to see interest in the space is in those companies that are putting a developer first spin on things. You don't necessarily know where the next big platforms are going to come from, and being able to have a foothold in the developer community that lets you kind of get in early, I think is a tremendous advantage, because oftentimes your cost to sell into those types of organizations is a lot lower, and lets you be positioned to scale alongside kind of the next unicorn size platform without having to incur, as we saw in Okta's financials, a really big charge in terms of your sales and marketing costs to kind of earn or purchase $1 of revenue.
I think, given the OWI audience, I do think it's worth making the point to distinguish between, over what, just to talk a little bit about timeframes, right? Okta's, built this incredible business. Now they're saying, well, look, we also want to have developer coverage, right? I don't think that's a particularly good strategy for startups to say, look, there's a broad abstract need that both large enterprises and developers have, so we can build a product that covers both. Now, I think for whatever reason, for startups, Series A, even Series B, you probably want to know which specific segment you're going after, right? So this is now, very different, where Okta's reached a level of maturity where it makes sense to go from, the largest enterprises to also buying into more of the developer segment, or even, what you would consider more like the SME segment, if you just looked at it by like economic sizing. The other way, and I should have brought this up earlier, the way I like to think about that deal, right, is Okta allows you to issue, credentials to your workers to integrate with software that other people built, right? So they're your credentials integrated with like software tools that other people have built that are deployed in the cloud. Auth0 is, how do I integrate credentials with software that I've built, right? And so now you can see how there's this more complete just solution, and to what extent are there going to be synergies in product development and R&D going forward. I think it's worth, it allows them to, as certain developer first companies potentially become much, much bigger, or have bigger and more complex needs. Now Okta's really can acquire customers, and as they move up segment in sizing, they can continue to work with those customers. So like, it makes a lot of sense. When I look at, the honeycomb, and now think about some of the different adjacencies, I think, we still need to think about where different network verticals and markets are in terms of adoption of some of these key technology trends, which is still things like, where are they in their migration to the cloud? To what extent are they mobile native, mobile first, or an omni-channel solution. And I think that has a big influence over, where things go. I don't consider, when somebody's really just still focused on software credentials, integrating with software tools deployed in the cloud, that's generic, but that's still a specific and definable segment. You referenced call sign. Call sign's obviously much more focused on consumer identity to the extent that we're doing things like, banking and payments and transactions, right? And whether it's in an e-commerce or some sort of other financial services context. And though that market, that network segment is still is at a very different stage of sort of like cloud migration, and then also how many different channels do you interact with customers through, and what's your customer base. That's still something that's very, very different from where, say, like Okta and Auth0 customers are. And so I think it's worth thinking about when we say, okay, well, they could go into some of these different segments. And it's funny you asked, because somebody specifically asked me about that deal. When the deal was announced, somebody asked me about how this, potentially affects something like call signs. Like, well, it just doesn't. Like, not in the short term, and not really even in the medium term. Over a long enough term, where you get a certain like broad enough consolidation, and all of a sudden now everything's identity. And I know in a couple slides we're gonna get to the identity layer of the internet. If we're talking about the identity layer of the internet, then over a broad enough, long enough time horizon, everything's competitive. But there's still, to the point I made earlier about the market, rewarding Okta with a very rich price to sales multiple. And when I say rich, I don't mean unjustified, but it is a large substantive multiple. It's clearly saying that each of these honeycombs is very, very deep, and it allows you to do some interesting strategic things without having to be the identity layer of the internet.
Yeah, that's a really great point. And before we move on to kind of the other announcements of the month, which is what you're alluding to in terms of the identity layer of the internet, Cameron, I'll give you kind of 30 seconds here for last final thoughts on this deal. Where do you see this kind of going? Who should we be looking at next?
It's a great question. I mean, I think you need to look at the other IAM players. You called out Ping. I think ForgeRock, another one to look out for. This market segment continues to be really hot, and I think these other players are going to need to maybe make some moves. You have the 1,000-pound gorillas of Microsoft, of Google, that in many ways, can afford to productize this IAM piece, because they're able to profit more directly from selling cloud services, from selling, in Microsoft's case, your Windows, your Office 365 licenses, your Azure products, and monetize that. And then Google, they're selling the Google G Suite product. They're selling Google Cloud. So in many cases, they can kind of take a loss leader position on IAM. So I think that is going to necessitate continued investment from these other smaller IAM players into adjacent market segments to be able to continue to grow and compete. So I think those two players that I called out, let's keep an eye on them and see what they do next.
Yeah, same question to you, Dave. Where kind of final thoughts on this deal? And yeah.
Yeah, I mean, look, the one thing I would say is I think that was, to Cameron's point, it's certainly a market that's not for the faint of heart. The largest technology companies in the world with 12 and 13-figure market caps are competing in this segment. At the same time, I think the largest enterprises are, their procurement teams are pretty sensitive these days to vendor dependencies. And so I think we're still going to see, I don't think that I think you have to be cognizant of these competitors, and they're going to be very effective, and they have good solutions. I don't think that they're going to own and dominate the market entirely. They'll have significant positions. And so, I think it's just a sign of how, the competition is a good thing, right? Because it's a validation of the market opportunity that everybody's investing so much capital in it.
Yeah, and I think my kind of final thoughts on that kind of really go hand in hand with that. Workforce IAM, $30 billion market. customer IAM, $25 billion market. 55, Okta is now sitting in a $55 billion market with their Auth0 acquisition. Both those companies have some significant revenues, right? Okta is around 800 million. Auth0 has about 200 million ARR. Talking about some pretty big numbers here, right? But relatively small to a $55 billion market. So there's a lot of room to grow there. Again, I really like this deal, super defensive, and I think it's going to really play out well for them. But Dave, like you mentioned, we'll check back in 10 years.
Yep.
And so with that, let's talk about the smaller deals. I mean, obviously these are massive deals first off, but the smaller one, obviously compared to a $6.5 billion acquisition. Here are the three ones that happened in the past week or so. Jumio, Socure, and ID.me. Jumio, of course, raising the $150 million from our good friends over at Great Hill Partners. Lots of really great stuff there coming out of the Jumio shop over the past couple of years with their automation efforts with Jumio Go. We see Socure raising the $100 million at the $1.3 billion valuation, putting them as well as ID.me into that unicorn status, which is of course quite new for the identity ecosystems. But obviously Socure really gaining a lot of traction during the pandemic, kind of blowing out their expectations. And then ID.me, raising $100 million, led by Google, right, with capital G, putting them at about a billion valuation, which is quite significant. And obviously Blake and the ID.me team have been at this thing for quite some time. So really exciting to see those guys kind of really making it with this valuation. Cameron, what are your thoughts here? I'll let you pick whatever one you want to talk about, and we'll dig on in.
Yeah, I mean, just a quick hit on Jumio. I think we have seen continuing expansion of the applicability of kind of the identity verification, document verification market segment, especially from the impact of COVID, continued demand for use cases like age verification, and kind of moving beyond just what you might think of for when you need to scan a document, which is, opening a bank account, into so many other verticals. I think this is a vote of confidence that identity verification is going to become a part of many market segments across the broader economy, not just what we think of when we think of kind of regulatory identity applications. And I think you can say in many ways the same thing with Socure. A big part of what's driving that valuation is their ability to continue growing their business outside of just financial services, move into a bunch of other verticals. I know we're going to dig into that with their CEO, Johnny, later in this session. So I won't burn too much on Socure here because we're going to be able to talk with Johnny directly. And then I know you said pick one, but I'm going to pick three as I'm wont to do. ID.me, I think just from a validation perspective, that there is maybe as pure play of a digital identity company as exists today, reaching that mythical unicorn status. Really exciting for us. We've known Blake for a number of years. He's been working with our team kind of since the launch of One World Identity. We're both kind of out there preaching the identity gospel, as it were. And I think it's really exciting to see them, gaining scale with, the closest thing to a true digital identity wallet, as we have seen kind of get both user success as well as economic success in the market. So we'll see what happens. I know the Biden administration and vaccine passports in the news, maybe expect ID.me to make some waves there. So Dave, what are your thoughts on which of these deals has you most excited?
I mean, well, look, so I share your view that, ID.me is probably, to me, the most interesting, just because I think it's the most unique sort of business case study, right? And that they started with one verifiable claim, veteran status in e-commerce a number of years ago. So you had really one pretty narrow attribute when you think about it. And they've been able to just verifying that in one specific use case, e-commerce. They've been able to now bootstrap that into a pretty, clearly a very substantial business where they do a whole bunch of other things. And so, as you said, they're also, as a very, sometimes you see them talked about as it being an identity verification business. They've certainly done a lot of work around distribution of stimulus and unemployment aid last year during COVID. And so they're now doing a lot of different things, but again, having an identity wallet for an affinity group, I think that's going to be, I think we're going to see a few more examples of that emerge in the next couple of years, where somebody now identifies some sort of segment or affinity group and realizes that there is, because of just some unique transactions or relationships that are formed for that affinity group, that you can actually potentially build what ultimately turns out to be a pretty large business, just addressing those needs through a wallet, rather than having to be, the one wallet that rules them all and trying to compete with Apple, Google, or follow a model that's analogous to some of the Chinese internet companies. Is there now this potential to say, look, I can find an affinity group and really just go narrow and deep in that specific segment, rather than worrying about trying to be the one wallet to rule them all. So I think that's very interesting, and I think there's a lot of lessons that other sort of like early stage startups could learn from, trying to see how Blake built this very big business that's now doing a lot of other things. I think the other point I would just make that's kind of broader on this slide is identity verification. It's interesting to see how much money is going into identity verification for me, for a couple of reasons. One, I remember a couple of years ago when people were criticizing all the funding that was going into consumer startups and consumer apps, and pointing out that like 30-40% of every like VC round for a consumer company was ultimately just going to buy ads on Google and Facebook. And that's where like a ton of that money was spent. And really it was just this weird thing where like, Google and Facebook were like the venture capital tax. And I think you can almost say a similar thing these days about identity verification, right? Which is, we have all these new wonderful fintech startups, and we have all these new marketplaces, and we have all these, so many different, we have this just explosion of startups, and it's not going to end anytime soon. And identity verification is kind of a toll taker in some of that. So that's that's a point. Like, they've clearly got a lot of growth ahead of them. I still wonder, for me, when people talk about, we can talk about the different definitions of the terms, verification or proving, authentication, authorization. I still like to think of them simply as like joining a network, accessing a network, and then transacting within a network. And it's interesting that joining a network, that there is still, how long, over what time frame is document verification or just like identity verification period going to continue to be a business? Because you're kind of reliant upon the fact that there's going to continue to be this lack of interoperability between networks and markets. And will that continue? To what extent can these businesses just continue to execute on the opportunity ahead of them? Or do they need to think about the fact that like, hey, it's great that we have all of this transaction flow right now, but ultimately we need to figure out how to bootstrap this transaction flow and this data asset into another business. We need to either find a wallet, or we need to find how to underwrite payments for risk purposes, or we need to do some other things as well. And so I think what will also be interesting to see is like, with these huge funding rounds, to what extent do we now see these companies trying to acquire other businesses or move into sort of like ancillary services that aren't just about onboarding a user to a network? That's kind of my takeaway.
Yeah, no, I think that's, and Dave, I think that's, I think you're spot on there. I mean, when we talk to all of the large IDV doc verification companies out there, right? Jumios, your Mitek's, your Onfidos of the world, right? Doc verification, to your point, is this opportunity that has started to be commoditized, right? And not started to, it's been on this path now for several years, right? Large VC dollars came into this space in 2017, 2016. And of course, companies started to compete on price. I mean, I know when Cameron and I, when we started doing a lot of consulting here at OWI, we would go do RFPs, and the pricing sheets we get from people was literally, it would say company name minus 1 cent. And that's how people were pricing their goods and services, right? It was just, how can I charge a penny less than our competition? which, that doesn't really help anybody in the long term. But what you do see there is they have networks, they have scale, right? These companies are big. They have, in many cases, hundreds of customers, large scale customers. And now they're looking at the map here, and they're saying, where do we go next, right? So what you see on this map now, Socure, Jumio and ID.me are not the same company, right? So obviously, and they're not working together, right? So like what you see here on this map does represent all three of them, so it is quite confusing. But what we're starting to see is the interest to go into the areas that are highlighted: behavioral biometrics, customer IAM, authentication, mobile identity, and device intelligence being the big four. Obviously, a lot of crossover there from our Okta Auth0 conversation. So starting to see some of the worlds blending quite a bit. And then there's one other one in here that I didn't color in, but I wanted to highlight, which is the alternative credit and financial identity. Just given that this is a use case based off of the data exhaust these companies are creating, right? And because we are trusting these companies with some pretty significant PII, as well as their own scores that they're creating, that you can argue that it is PII as well, is going to really be able to support this financial identity, the rise of financial identity, and the alternative credit use cases that we've seen out in the market with companies like Tala, Nova Credit, and Juvo, right? Starting to see those companies starting to empower them. But taking just to kind of a step back here and looking at this landscape, lots of crossover between identity verification, more regulatory risk compliance types of companies, use cases, and our enterprise cybersecurity companies like Okta and Auth0 here with this customer IAM, authentication, behavioral biometrics components to it. What do you guys take? Well, almost forgot one. Password managers also being an area. Lots of external dependencies coming in from the password manager world. We're starting to see those companies really play a strong position. When we look at ID.me, we're thinking about the identity wallet. How can that work with password managers in the future, right? So we are starting to see that as a big question mark for the companies like LastPass and Dashlane and others out there in the space with a password manager. But when you guys see this kind of on the map here, what kind of comes up for you guys? What are you thinking? And if you are in the C-suite of one of these companies, what's kind of most interesting to you today?
Well, look, just as an interesting point, I mean, I think it's worth saying, just reemphasizing what you just said about password managers as well, right? Which is, on the one hand, we see a lot of funding going into companies that are killing passwords, and we're talking about passwordless authentication. At the same time that Dashlane and LastPass, I think, raised $300 million either last year or late 2019 or something like that. So it's interesting to see that there's a certain like cognitive dissonance to all this, where you're seeing like a lot of funding, sometimes from some of the similar investors, going into both things aren't going to change and things are going to change remarkably. And so maybe the answer is that it's both. I mean, look, I think certainly, when you're getting into a wallet, identity verification companies, right? These are like transactions you do at one time. It's kind of done. Yes, you can have, yes, there's, recurring revenue, or you're going to have certain relationships with certain counterparties who are always going to use certain volumes, but it's not quite the same thing. You're not going to get the same multiple as a SaaS company, right? Which is able to show, positive revenue retention, as well as, revenue growth from the customer base, as well as like really strong revenue, strong lifetime revenue retention. So, wallets is obviously like the most interesting. If you can get into fraud prevention and risk management, that's obviously like very recurring. It's not always sold as a SaaS product, but it can be. That transactions are always going to flow through, or payments are certainly going to flow. So if you can go from identity verification into something where you're underwriting like payments and banking transactions, like that's very attractive. And then of course, behavioral biometrics, which is highlighted on here. Anything that you can do to just ease onboarding flows or ease authentication flows by just making that more invisible, that's going to allow you to push more and more into the mass consumer market. I think a lot of the passwordless solutions that are out on the market are very interesting today. I still think that there is an issue with how do you kind of like onboard or bootstrap, kind of the average person who's not sort of as sensitive to these issues, or maybe just doesn't want to spend the time to, doesn't want to use a hardware key, doesn't want to download yet another app so that they can just do passwordless sign-in. I mean, people want these things to work easily when they want to buy something. They don't think, let me set this up so that it's easy, next time I go to the grocery store. It's like, it's got to be a real point in time. So that's kind of how I think about these different categories. And so, we'll see to what extent those companies can push into them. Certainly they've got, with the transactions they're processing now could potentially allow them to expand into some of these segments. But it is a question to me, with probably the exception of, ID.me, which already has a wallet, if we've kind of discussed.
Yeah, I think, I agree 100% with everything Dave just laid down. I guess to phrase it a different way, thinking about where the value pools are, from my perspective, is turning this into, a seamless customer experience, moving beyond thinking about, identity verification and credit and risk scoring and KYC, and identity proofing, and the, maybe the payment side of things and the marketing side of things as discrete points in time and solutions that require individual point solutions. And the winners are going to be the companies that can offer businesses a seamless identity layer that allows the consumer to move effortlessly across, being onboard, being identified as a potential high value customer, being onboarded, being re-authenticated, being credit and risk scored, and really allowing for people, again, to do what they came to do. People do not want identity verification as a consumer. They want to open a bank account. They don't want fraud prevention and risk management. They want to be able to get into their Amazon or whatever account, add a bunch of things to their cart, check out with a minimum of friction, a minimum of hassle. And the companies that can facilitate that, I think, are going to gain one, market share, because this is what the enterprises that are looking to buy identity solutions are looking for. But two, they're going to be profitable because, to Dave's point, that's where you can really unlock kind of those SaaS type revenues and multiples, when you can be a persistent and kind of sticky solution that can exist long after someone got identity verified one single time. You're not charging folks $1 a pop for IDV. You are a persistent identity layer that's going to live underneath the customer experience, kind of throughout that customer lifecycle, not just a single point in time.
Yeah. So I think you guys are both kind of spot on here. Obviously, this is a rapidly evolving space, right? I think that's kind of my key takeaway. We have some big investments coming in. When we talk to private equity managers and other types of fund managers about where they are raising money today, it is for a couple things: persistent identity management and decentralized identity, but thinking about the consumer and how identity is moving, not just for the enterprise, but also with the consumer in mind, which is actually going to bring us to our next topic here, given we are kind of running out of time, which is SPACs. Super fun topic, right? So obviously we've seen some pretty intense traction with SPACs, not just this year, but in previous years. Just some facts here. SPACs accounted for about 21% of the total IPO activity in 2018, 28% in 2019, 57% in 2020, and so far this year, roughly 75% of all total IPO activity. And just to kind of think about that, in 2020, we had about $80 billion in raised funds for SPACs alone. In 2020, we also saw about 248 IPOs. So significant numbers. Obviously, you can't turn on the news without hearing about SPACs. But again, we're going to go to our resident CFA here. Dave, what the hell are SPACs?
So a SPAC is a special purpose acquisition company. Effectively, what you're doing is you are taking a shell company public and you're raising capital for it. This sort of the standard deal is you issue, shares at $10 a share, raise a couple $100 million thereabouts from investors. Investors also receive warrants that they can buy additional shares. Warrants are similar to options, except warrants you're buying a primary share rather than stock options, which are traded in secondary, not employee options, but options where you're buying secondary shares, right? So you're buying shares directly from the company. And that's kind of part of the benefit of being part of investing in that IPO process is now you've got this additional sort of participation in the upside when a deal is announced. If it's a good deal, well received, you'll see a stock lift and you've got the ability to buy more shares at a discount. The purpose, the reason we kind of start to see this explosion in SPACs is it's somewhat, on some level, it's a bit of, there's an element of regulatory arbitrage here, or at least, I wouldn't call it a loophole, but there is a little bit of a regulatory arbitrage here in that when companies go public, they're not allowed to make forward-looking statements. So they're not making 3- and 5-year projections. They're not telling you a story about where the company is going to go. On the flip side, when you acquire a company, you can make forward-looking statements. So if I'm a public company and I'm acquiring something, I can say, this is the strategic rationale for the deal. Here's the cost synergies we're going to realize. Here's some of the product upside and opportunity. You're just allowed to make qualitative and analytical statements that are forward-looking in a way that you can't if you're, as and when you're going through the IPO process. And so we've certainly seen SPACs take hold in some of the, in a certain number of like hard tech investments. I believe Desktop Metal and maybe I think one of the other 3D printing businesses went public. And so now you can take these businesses who have, if you're a SaaS company that's executing well, it is not hard to IPO right now because you're going to have metrics that are really, really, really well understood. And you can put out an income statement, put out an S1, and there's a number of analysts in Wall Street who can rip that S1 apart and they can extrapolate their ruler over 3 to 5 years and you can come to a good price and like those products. So I think we're starting to see SPACs used in a couple different places. One, where you have more nascent markets, things with sort of like hard tech risk, which is not something that has been as IPO-able the last few years. And so now you can start to explain to somebody, here really is what our opportunity is longer term down the road. We don't have these really finely tuned metrics that you can now just sort of like extrapolate. So we do need to explain a little bit more what the business opportunity is, why we're pursuing it, and then kind of like what are both, what's the upside and downside scenarios. So like that's where you're seeing it. And then we're also going to see SPACs used for companies that can't go public through the traditional route. So like if I see, when I see software companies or companies that should have an easy path into market that are following this route, I do kind of, raise my eyebrows a little bit there. But like, it's like any other financial tool. We're going to see it used in some good ways, and we're going to see it used in some bad ways. And that's just kind of how financial markets work, if you ask me.
Yeah.
So.
No, that's very, very, very helpful. Thanks, Dave, for that. I think, one of the interesting things here is because we get to work with a lot of companies doing financing, right, and as well as from the M&A side. SPACs have not been a term that a lot of identity companies are throwing around, but as valuations get closer to $1 billion, which is about the sweet spot for these SPACs, right? You want a company about $1 billion plus into 2 billion. And you don't want a lot of companies where you're smashing 2 or 3 companies together. You really want to mitigate that type of transaction risk. So it's typically a single company. But as we see more identity companies get to that close to $1 billion plus valuation marker, should we expect to see identity companies going this route more commonly, just like you mentioned with at the firms, or even like WeWork last week?
Right. Well, look, I mean, certainly if a board has a discussion, they say, yeah, look, we want to go public. This is a faster path to get public. One of the benefits of being a public company is it's much easier to do M&A. that's how we started, the discussion today was talking about somebody who now has a public currency that they can use to buy things. And so even though, you wouldn't use a SPAC to combine or smash together a couple companies, if there are managers who are saying like, look, we can use a SPAC to buy a platform, and we can now then execute a private equity like strategy in the public markets. And that comes with certain benefits around, maybe access to the convertible bond market, or, the leverage lending market. There are other market, when you're a public company, there are certain funding streams that you have access to that just you don't when you're a private company. So like, I do think we'll probably see some of that, because like I said, like if you've got a company, you're like, look, this is a good platform buy, they're $1 or $2 billion. You can then negotiate a deal with a SPAC sponsor, and now you're in the public markets, and you can start doing M&A almost immediately. Now, if you're then at a $2 or $3 billion market cap, you're not going to be buying off zeros. You're going to be buying companies with stock at that maybe at that $50-100 million valuation. But if you look at the amount of funding that we've seen go into identity broadly since that first identity conference in 2017, right? There are going to be some good teams out there. There are going to be some good products out there that are going to get stranded. They're going to struggle to grow, and it's going to make sense to fold those companies into these other platforms. And it's always much easier to do M&A when you have a publicly traded company that's priced every day than when you're a private company. It's just going to be much easier. You're going to have a simplified capital structure. You're not going to have multiple classes of stock. You're going to have less consents and approvals that you need to get. It's just like, if you're at a point where you're like, look, we want to start doing deal making, then talking to a SPAC sponsor is something that's going to make sense for sure.
Yeah. Cameron, what are your thoughts on this? I mean, thinking about kind of the landscape broadly. I'm not going to ask you to throw company names out there. In fact, don't do that. But what are your general thoughts on SPACs and where you kind of see them being used in the identity ecosystem?
I mean, I think to Dave's point, it's a tool just like anything else. I think from the data that we've seen, there is a lot of money that currently is raised, but has not yet been committed to a deal. And if I had to wager a guess, I would say that there are a handful, maybe more than a handful of identity companies that are going to be attractive targets for some of these SPACs to take down. I think it may get frothy here in a minute, a bit like a game of musical chairs. You certainly don't want to be the last one left standing without a seat. I don't have a complete deep understanding of the ins and outs of the structure of SPACs, but my understanding is it is what's the phrase I'm looking for? Use it or lose it, so to speak. So I think this may lead to some companies getting taken down that might raise a few eyebrows because if you have committed to raise one of these funds, like you need to put the money to work. And there are only so many companies that are of a certain size and scale to be taken down in some of these deals. And so I think it may set off a bit of a gold rush in the identity space because, as we know, we're very bullish on the space in general. So I think there are going to be some companies that we have maybe even mentioned on this call that are going to find themselves targets of some of these SPAC deals.
Yeah, so 2 years is the time frame. So from the time you IPO, you have 2 years to consummate a deal. So.
Yeah. And I'm looking at some numbers here. Our good friends Jeffrey sent me over some numbers for this. Obviously, Jeffries does a lot of the great banking work in the SPAC space. There's roughly 68% of the funds raised in 2020 are still out there seeking. So those are folks still looking for their investment, with roughly 17% from the later part of 2019. So obviously that's kind of to tell you about it. But since 2015, only 10 SPACs raised have liquidated. So that's kind of an interesting stat there as well. I would love to keep talking about this, but we actually have one more topic that we want to get to before the end of the session, which I think you guys are going to really love, which are NFTs. Cameron, what the hell are these things, and why are we talking about them when we're talking about identity?
So great question. Kind of difficult to explain without leveraging maybe a bunch of other terms that folks who, if they don't know what that is, will get confused. But let's assume you have a kind of a baseline understanding of the existence of blockchain technology. NFTs, or non-fungible tokens, are a way of assigning ownership of an asset like a piece of digital artwork to an owner using the blockchain or an immutable ledger as kind of that single source of truth of who owns that piece of artwork. It's weird in some ways, but I think the best analogies that I've seen are like, photographs as fine art, in the sense that, let's pretend this image that's on the screen is an NFT. Anyone in the world can view that picture online. You can show it to your friends on your phone. You can see it. You could post it to Facebook or wherever. But there's only one person in the world similar to, like, let's say, a fine art photograph where they made one print. Only one person gets to say, "Hey, I have the original of that artwork, and I own it as an asset." And we've seen various types of NFTs launched recently. Beeple, a digital artist, has been selling kind of one-off NFTs of pieces of digital artwork, in some cases for millions of dollars. I think his most famous work sold for $69 million. And then you also have NFTs being launched by the NBA, for example, that are more akin to kind of digital baseball cards, if you will, where you can own a video clip of something like Nikola Jokic's 2021 All-Star Game dunk and trade those. Where I think this is really interesting is, surprise, surprise, it's intersectionality with digital identity. In many ways, I think people mistakenly view the fact that it is on a blockchain, or that there is some immutable ledger, as meaning that it somehow doesn't need an identity layer, or that it can't be stolen, for example. Just because where it went means you could somehow get it back. And that is not the case. We've already seen many examples of both exchanges that facilitate the trading of NFTs, as well as individuals, kind of wallets that hold these NFTs, getting compromised through very traditional account takeover techniques. And folks have lost, in some cases, hundreds of thousands of dollars of value with little to no recourse. They went to the NFT platform that they bought these things from and said, "Hey, help! Somebody got into my wallet and transferred these assets out. What can you do?" Well, the answer is, just like there's no Bitcoin, a central authority that you can go to say, "Hey, get these coins back from a wallet address that stole them from me." One innate virtue, if you will, of the way that an immutable ledger such as blockchain works is there is no admin who can just override a transaction. The address where it was, the address where it went to. That part is kind of set in digital stone. But there's nobody who can force a transaction to be undone. So in that sense, digital identity is going to play a critical role in the continued existence of these NFTs, because you need proper, password management and other identity layers to help these platforms secure these assets, help consumers protect these assets, and also kind of establishing the provenance of the creators of these. We've already seen artists having people who aren't them kind of rip off their work and create NFTs and try and sell them, pawn them off. So I think the identity layer of establishing the original provenance of these is another interesting challenge that we maybe haven't seen a full technology solution emerging for how to handle that aspect of NFTs. So I think interesting space. I'm not going to comment on whether or not this is a dumb investment or not. I think it's just like anything else. To Dave's point, this is a framework, a technology tool, just like anything else. Just like you can take a paintbrush and you could paint an extremely lewd cartoon drawing, or you could paint the Mona Lisa. NFTs, much in the same way, can be used to do any number of things. And I think there's going to be interesting and potentially valuable uses for the technology, as well as a bunch of really dumb stuff that will see a fool and their money soon parted.
Yeah. So I agree with a lot of that. I think, anytime you start talking about blockchain, Bitcoin, cryptocurrencies, any of these things, I think for me, it's always important to just like step back and say one important thing, which is that anytime you're doing something with that sort of blockchain, and I mean this in the truly permissionless sense, I don't permission blockchains to me need to come up with a new name. But blockchains, verification costs are zero, right? So that's what that means. There is no pricing power related to verification. So 2 segments ago, we were talking about identity verification companies raising 9-figure rounds at billion-dollar valuations. That's a different world because they've got tremendous pricing power over verification. And so in this world, non-fungible tokens, Cameron brought up provenance. What it means is that you can't really effectively operate a marketplace by saying like, look, I'm going to do the verification for you, whether that's an artist who's discerning whether something is in fact authentic or a forgery, or if you're a Ticketmaster who's now able to charge like these incredible fees on secondary transfers of tickets, right? Like in an NFT world, like those are business models that don't really exist. There's no pricing power relating to doing that because the provenance and the ability to verify is all done through freely available open source software. So to the extent that you're going to deliver some tool or solution to a market, it's got to be based upon something other than I'm going to verify data and its truth and its provenance and things like that. So I think NFTs are very interesting, but like everything else that we've seen in the last decade, it's going to get hyped. There's going to be parts of it that are going to make for just like, we're going to see ridiculously stupid headlines written about this by journalists who don't understand what they're writing about. And then we're also going to see idiots who are really like immature and irresponsible be quoted and say like just farcical things. And so it's going to be like ICOs were in 2017, 2018. If whatever you want to see, it's going to be the perfect Rorschach test. If you want to think that everything in blockchain is stupid, you can see that. If you want to say that NFTs are like this thing that's going to change the world in this really profound way, you can see that too. I tend to be in the both things are going to happen camp, which is we're going to see some great things in 5-10 years. We're going to see some really cool things that we couldn't imagine. And we're also going to see some like really silly excesses. So that's my take on NFTs.
Yeah, I think, for those that are looking at this and going, this is stupid. Let me give you guys some numbers really quickly. Here are some crypto collectible. Here are some crypto collectible rankings by sales volume as of March 10th, 2021. NBA Top Shot, which is what you see here. I took this screenshot last night or 2 days ago. They've currently done $337 million in sales with 127,000 buyers, which amounted to about 2 million transactions. CryptoPunks comes in second at $110 million in sales. We have Hash Masks at 40 million and CryptoKitties at 32 million. What I know about this is, when we were raising money for OWI when we first started, we had a bunch of commitments, and then some of those commitments went away to go invest in CryptoKitties, and I made fun of those people a lot until I saw what happened to CryptoKitties, and it's done very, very well. So let's just say I've already been wrong on NFTs in the past. So I will not weigh in on this. I'm going to take an approach here and kind of wait a little bit to see what happens. I think it's extremely interesting, as somebody who's played video games my entire life, like the concept of having digital assets have value online is not something that's super new. Having DLCs and those types of items, I can see this being a pretty big opportunity for the e-gaming community in the future. As for buying somebody's slam dunk, little off for me, but I'm excited to see how the identity community will react to it. So any final words, Cameron, Dave, on NFTs?
I'm intrigued to see how this all shakes out. It certainly has, tulip bulb mania kind of written all over it from my perspective. But again, where it's interesting to me is maybe not necessarily in the digging for virtual gold aspect. It's more in the selling folks digital pickaxes and digital blue jeans. So I think that, again, this is another really interesting opportunity for digital identity to prove itself useful. And I think the NFT platforms that maybe will see the most success are the ones that are going to take digital identity seriously. So that might be an interesting lens through which to evaluate NFT opportunities, as well as an area for future growth for digital identity platforms and providers to find a new application for their offerings.